executives. That is the East African pipeline that is being constructed from Hoima to Dar es Salaam and Tanga. Last week, the executives from Ugandan government and oil companies remained confident that the financing package for the project, which is the key commercialization of Uganda's oil, to the commercialization of Uganda's oil, is one on the home stretch and will be tied up in about 2 months now. The confidence is buoyed by recent revelations by the Financial Times and the Bureau of Investigative Journalism of the New York-based insurance broker Marsh McLennan will come on board as the insurance arranger. This brought optimism after global insurers like Swiss SRE, AXA, and Zurich last year declined to cover the $5 billion pipeline that has faced a fierce campaign and criticism from the climate and environmental activists who described the project as toxic. Now, in March, reports showed that East Africa's crude oil pipelines promoters, Total Energies, were banking on European and Asian export credit agencies to provide financial guarantees for the project, to bring on board commercial banks to provide loans. Officials in Kampala are guarded on which financiers are involved, but indicate that the wheels are starting to turn. Now, the East African Crude Oil Pipelines Deputy Managing Director John Bosco Habumugisha said that potential lenders had traveled to Uganda and Tanzania to evaluate the project, and that the authorities will announce the financiers within 2 months. What I can say in what he's saying, what I can say is that we have very many entities that are willing to fund the project, as he said on May 19th, while giving an update on East Africa crude oil pipelines execution in Kampala. Insiders say arranging East Africa's crude oil pipelines financing has been a headache, a slow and a very complex process due to the environment concerns and negative campaigns by climate activists. It has been difficult, a source said. Every time something is said or written about this project, a financier drops out. Now, the project financial advisors are the Standard Bank of South Africa through its Uganda subsidiary, Stanbic Bank Uganda, Chinese giant industrial and commercialization Bank of China, which owns about 40% stake in Standard Bank, and Japan's Sumitomo Mitsui Banking Corporation. A fortnight ago, climate activist Dominica Lasota confronted France President Emmanuel Macron in Brussels, asking him to denounce East African crude oil pipeline, cut off support, and stop the project, in which the French major Total Energies holds up to 62% stake. Now, such campaigns have seen major lenders desert the company as the push for clean energy sources gains currency. Total and allies were in a hurry to announce their final investment decision in early February this year. Since then, the list of banks and insurers staying awake from East Africa crude oil pipeline has been growing, according to Omar El-Mawi, who is the coordinator of the Stop East Africa Crude Oil Pipeline Coalition, said last week. Now, last week alone, 5 banks, that is the Dutch Bank, Citibank, JP Morgan Chase, Wells Fargo, and Morgan Stanley confirmed that they would not finance anything to do with the East African crude oil pipeline. Insurer Beazley Company and Italian export credit agency SSCE also opted out. Another 13 banks, including 2 Total Energies traditional lenders, abandoned the French giant headlined project between 2020 and 2021. But experts argue that there is a way back for some of these lenders if Total is on course for a low carbon emission transition. Now, Total Energies said in its 2021 presentation to shareholders that for the Lake Albert project, it has set a carbon intensity target of 13 kilograms of carbon dioxide equivalent per barrel of crude oil produced. That is 13 kilograms of carbon dioxide per barrel. Now, globally, carbon intensity for crude oil ranges between 10.1 to 72.1 kilograms of carbon dioxide per barrel of the oil. And the French giant's French chief executive, that is Patrick Pouyanné, says the firm is transitioning from fossil fuels to renewable energy and remains on course to achieve net zero carbon emissions by 2050. Upon completion in 2025, East African crude oil pipeline will be the world's longest heated pipeline, transporting about 216,000 barrels of oil per day from Hoima in Uganda's Lake Albert region to Tanzania, to the Tanzanian Indian Ocean port of Tanga, spanning a distance of about 1,443 kilometers. Now, the pipeline, whose construction will start in the second half of 2022, will generate up to 34 million tons of carbon emissions each year. But Mr. Habumugisha says activists are failing to recognize measures the project promoters are doing to mitigate the environmental impact. He says that they are introducing intrusion detection technologies, and they have added leak detection systems, and they have added general physical surveillance in addition. Now, he also said Total Energies and China National Offshore Oil Company, that is CNOOC, took the final investment decision in February to invest $10 billion toward production and transportation infrastructure to drill, produce, and commercialize oil in Uganda. So that is a story right there coming in from the East African crude oil pipeline that is finding bottlenecks in its financing, looking for over $5 billion to finance the project. But due to so much backlash that has been given by environmental or climate activists like Mr. Dominique Lasta, who attacked the French president recently during his interview and said he should stop financing the project as it will actually build on the carbon emissions that are trying to be stopped in the world. So that is a story coming up there. Financing, we are looking for $5 billion, and you never know, our local banks here in Uganda and so on could actually finance the project with $5 billion, if at all they can. And so we can actually start, benefiting from our oil. We'll be following up that story later on in the day and the week as well. Now, in another story, Kenya Commercial Bank has posted a 54% increase or rise in its profit for the first quarter of the financial year ended 2022. Now, Kenya Commercial Bank Group PLC posted a 54% growth in its net profit for the 3 months to March 31st, largely supported by growth in interest and non-interest income and a reduction in loan loss provisions. Now, the regional lender returned a profit after tax of about 9.78 billion Kenya shillings. That is closely 84.31 trillion million US dollars, compared with 6.37 billion or 54.91 million US dollars in the same period last year. According to the group chairman, Mr. Andrew Kairu, he says that they are optimistic of improved business growth in the remaining part of the year as economic fundamentals improve in the East African economy, despite global threats and other local developments, including the upcoming general election in Kenya. Their priority is to harness economic drivers to accelerate the pace of recovery and growth. That is according to Mr. Kairu. Now, the group's unaudited financial statements show that there is a 20% surge in total revenue to a total of 29.03 billion Kenya shillings, that is 250.25 million US dollars, from 23.04 billion, that is 198.62 million US dollars, with total costs going up by about 16.8% to about 12.9 billion Kenya shillings from 11.1 billion in the same period last year. Now, the net interest income earned on loans and government securities grew by 18% to 19.7 billion Kenya shillings, while non-funded income or non-interest income grew by about 47.2% Kenya shillings. The group's investment in government securities grew by about 32.6%. That is in treasury bonds and bills of government. It grew by about 32.6% from 281.8 billion Kenya shillings to about 212.5 billion Kenya shillings. Loan loss provisions decreased by 27.5% to 2.07 billion shillings. And even as the non-performing loan book continued to come under pressure due to slow recovery in construction, hospitality, and part of the manufacturing sectors. Customers' deposits increased by 12.9% to about 845.8 billion Kenya shillings, while a loan book increased by 18% to 704.4 Kenyan billion shillings. And last year, KCB acquired a 62.06% stake in the BPR from British Financial Services conglomerate Atlas Mara Limited, that is ATMA, and later increased the stake to 76.67% by acquiring additional 14.61% of the shares from the monetary shareholders. Now, the transaction increased KCB's assets by over 15.4% to about 1.13 trillion Kenya shillings. That is 9.74 billion US dollars. KCB has operations in Kenya, Uganda, Tanzania, Rwanda, Burundi, South Sudan, and a representative office in Ethiopia. It is also been keen on entering the Democratic Republic of Congo as part of its Pan-African expansion bid. Last year, regional subsidiaries' contributions to the group's profit increased by about 13.7% from 13.6% in 2020. That is a story right there to follow as KCB registers an increase, a 54% increase in the profit, in their net profit from their revenues as per their financial and non-audited financial results for the period ended in March. And it becomes one of, I think, the top bank in East Africa. That is locally, because we have other companies like Stanbic Bank, but they are, international. Like Stanbic Bank is a subsidiary of Standard Bank Group that is in South Africa. But locally, with our banks here, it is the top bank, ranking number one in terms of net profit and profitability and investment, and in terms of assets that are owned by the bank. And as well, in a related story, Mr. Joshua Oigara has had a stellar tenure headlining, change of guard at KCB Bank Group. Now, Joshua Oigara is a long-serving chief executive officer of East Africa's largest bank, that is the KCB, and he has just exited the central executive officer suit with this week, leaving a legacy of transformation, change, and innovation. Now, in the 10 years, he has actually transformed the nature and character of the bank from a lender, mainly serving large government ministries, departments, public sectors, clients, into an innovating and true mass market retail bank, while retaining a big presence in the banking large corporate, institutional, and government clients. Now, the real estate or real taste of a CEO and business lender's performance is the results they produce over the entire tenure. And the metrics of evaluation must be based on objective data, not public opinion. And the metrics of financial intermediation, Mr. Oigara hit the ground running when he took over running of the bank in January 2013. The lender achieved spectacular growth in customer deposits accounts over this tenure, and customer deposits grew at a compound annual growth rate of about 35%. Data extracted from the regulatory financial disclosures and the Central Bank of Kenya, Kenya's bank supervision reports show that net loans and advances growth over Oigara's term grew at a rate of about 14.5%, easily outpacing the banking industry's numbers at a much lower rate of about 8.3 over the same period. Wow, that is a stellar performance right there from Mr. Oigara Joshua. Now, KCB's share of the industry's loans and advances rose about from 15.2%, as we already mentioned, to a remarkable 22.7% in 2020. In other words, going by analysis of the statistics from the regulatory financial disclosure and reports by the central bank's supervision reports, KCB advances nearly one in every 7 shillings in Kenya's banking sector today. So he has achieved a lot, and I think it is something to look out for KCB. Remember, KCB is a listed company on the Uganda It's a listed company on the Nairobi Stock Exchange, but as well cross-listed on our exchange here in Uganda, on the Uganda Securities Exchange. Later on, we'll be talking to Mr. Mwima about KCB as well, to tell us of how it has performed on the stock market. Remember, all these companies we can invest in, and why we bring these reports is to show the profitability, the resilience that these companies have put up over a period of time, so that you can actually safely invest in these companies. So Kenya Commercial Bank has made its name. With its new CEO, we have to watch and see what he has to bring on the table. That is Mr. Paul Russo, and congrats, I think, to the outgoing CEO, Mr. Oigara Joshua. Our time is fast spent, but we are going to go into a short break. We'll return with more, and later on in the day, as I promised, we'll be talking to Mr. Andrew on the current stock market updates and what is happening on the Uganda Securities Exchange. We take a quick breather. Don't go anywhere. We'll be right back.